The value of gross mortgage lending in the UK exceeded the £18 billion mark in May this year, new figures published by the Council of Mortgage Lenders have revealed. According to the CML's latest monthly market commentary, lending rose by 4% during the month from April this year to reach £18.2 billion. This represented a 14% annual upturn from the result of £16 billion that was recorded in May last year. At the same time, the figure of £18.2 billion was shown to be the largest May result for gross mortgage lending in the UK since the onset of the economic crisis in 2008, when a figure of £23.7 billion was seen. Overall, the monthly and annual growth seen in May highlights an ongoing strengthening of the UK mortgage market that has been a common factor in sector performance for more than the last year. However, the outlook for the UK mortgage sector has been affected by the recent outcome of the EU referendum, with the UK voting to leave the bloc, and it may therefore prove difficult for further gains to be witnessed in the months to follow. Indeed, CML senior economist Mohammed Jameh stated that looking ahead, there's likely to be considerable uncertainty as a result of the EU referendum decision. We expect this to affect sentiment and reduce activity below levels that would otherwise be expected in the near term, as both buyers and sellers adopt a wait-and-see attitude until the dust begins to settle. Market fundamentals underpinning house prices still look sound, and we do not expect significant house price falls, especially given the current supply-demand imbalance. Mr. Jameh went on to add that lending in the first quarter of 2016 was typified by a significant rush to beat the deadline of impending changes to UK stamp duty, a development that pushed up transaction volumes and the value of the market overall. However, with this rush now past and the uncertainty created by a decision to leave the EU, UK borrowers may now take a more measured approach to borrowing in the mortgage sector, and this could place a considerable drag on the market in the months ahead. It's by no means a negative market outlook for the industry just yet, but the consecutive and powerful increases of recent months may now be a thing of the past.